Hello, today is July 3rd, 2021. Let's go over our disclaimer first. We always do that. It's my trading plan for the 6th of July when the market reopens. I can be 100% wrong, so all trades should be at your own risk. We always like to review our calls. We looked for higher prices on Friday, and this is higher prices. We look for the pattern with the early high, and this is it. On Tuesday, I believe we'll see a pattern with an early low. During the day, MEJT said this drop was false and price would retrace. Said this rally was false. We got the retracement. And here's our target to return to this area, and we did that, and that was support. I like to report on what the Mark stuff says, even though I think it hasn't worked. There is some validity to some of his things. Typically, when you get his signals, it indicates you're overextended. In the past, sell signal like this, you could count on the overextended condition to give you a drop. For years, that hasn't happened. It's just consolidated instead. It's worked out the overextended condition by consolidating over time rather than by dropping in price. But we do have a new signal right at Friday's close, 9 bars of setup like this. And the 9, 13, here's your 9, 13, 9. Setup indicates an extremely overextended condition. You'd like to have this within 3 days of the top. It's like 4. I'm not going to quibble about a day. But this is his indicator for an extremely overextended move on the upside. And even though some of the other stuff hasn't been as promising, when you get 9 bars of setup like this, there's a high incidence, but not a guarantee of a pause the following day. Well, this was our beautiful count, which didn't work. We never really undercut some of these prior lows. And I think we're going to have to go back to our original count. I've moved the A down to here. Here's the original count. You have an A and a B. I don't think the move's over, but you can make a case for this leg being over. But of course, this isn't the only price at which you can make a case. You have an A, you have a B. You want A and C to have some kind of relationship, which they don't. But if you look at A of magenta A and A of magenta C, they have a relationship. If you look at B of magenta A and B of magenta C, they have a relationship. And if you look at C of magenta A and C of magenta C, they're related 1 to 1. They're off by around 10 handles, which in a market in the 4350s doesn't mean much to me. So there is some kind of Fibonacci relationship between these legs. Now, one trick that somebody showed me years ago let's just get rid of this, was to take the first leg up, set it at 23.6%, then move to the first pullback and look at your 100% level. And that's what we hit right at Friday's high. I'm not going to claim it's perfect. I don't think anything's perfect, but it's been reasonably reliable, and identifying resistance areas, so I have to call Friday's high resistance. Gann liked square numbers to call resistance. The market bottom back in 2009 at 666.79. You just move the decimal point over, drop everything off. The decimal, you square this, you get 43.56. That's about half a point away from the high. So there is resistance at the high. I don't think it's going to hold forever. Markets don't really top out on holiday weekends. But at least there is resistance, and usually when you get resistance like this, you want to clear it quickly, or at least expect a pullback of some kind, even though it probably isn't the end of the whole bull move. When you get markets that rally on Fridays like this, you really expect it to follow through when the market reopens. If it doesn't follow through, and I'm not saying it won't, but if it doesn't follow through, I'd believe it, at least over the short term. So what you really want to see for the bull is to continue the rally, ideally by gapping over this high. But if instead we move down smartly and this high holds, at least you got some rationale for believing it'll hold for a reasonable period of time, and that we can take out some of the unsatisfied MEJT targets we saw as we rallied, because those targets have to fall at some point in any event. Here's my calls for the patterns for next week. Tuesday's pattern has the early low. It could gap up. Markets don't top on holiday weekends, so I believe higher highs lie ahead. However, that doesn't preclude, nor does it require, dropping first. Breadth hasn't improved on the recent rally. Advancers barely beat out decliners despite the new all-time high. Transports dropped on Friday. They aren't anywhere near all-time highs. That's divergence. Friday's high was a square number. That's a favorite Gann target. Is a number of Fibonacci targets. Triggered a DeMark 913-9 combo sell. It's a number of timing windows, completely unrelated to each other. They've all hit recently. A couple of them hit right on right on Friday. None of this is enough for me to call a short-term top with a high degree of confidence. And strong rallies on Friday usually follow through. But if they don't follow through, if that happens and we start down promptly, I don't know if it's going to happen or not, then recent unsatisfied MEJT targets come within range and could be seen fairly quickly, and we could drop well into the 4200s if this high holds. And of course, I don't know if that high is going to hold or not. I don't think it'll hold forever, but I don't worry about forever. I just worry about Tuesday. So if this high holds and we start dropping, if that happens, I think we could easily go back into the 4200s. If we gap over it, we've overcome resistance. And that's today's call.